All right, hello and welcome everyone to Trading Coach's Playbook. This is Brandon Wendell with you this afternoon, I guess. Now it's after 1 minute after 12, so technically noon or afternoon. Welcome, Brenda. Good afternoon. Welcome everyone to, like I said, Trading Coach's Playbook. My name is Brandon Wendell, and I'll be your host and guide through the psychology of the markets, something I actually uh, looked into or researched quite a bit when I was working for my CMT designation, which is Chartered Market Technician designation. Basically, it's kind of like a master's degree in technical analysis. And good afternoon, good afternoon, Kevin. Welcome again to everyone. Before we get started, though, I do need to put this out real quick that we are doing this from an educational standpoint. We may look at the markets, but again, we're not broker dealers or investment advisors. So this is for educational purposes only. I'm not telling you to buy, sell, or hold anything or give any personalized recommendations about the markets. All markets do involve the risk of loss. Always, we can just try to minimize and manage the risk, but we cannot eliminate it. It's getting a little more light on me there. Um, yeah, so we also may have positions in the markets or initiate them at any time. Yeah, not licensed, don't want that. Just want to trade and help share my ideas and information about trading with everyone and my experiences. So again, we got a lot of events coming up. You can see some of the premium online workshops. More than happy to join or welcome to join us. We got a lot of free workshops. Rob does Power Hour every week on Monday, and then we have alternating instructors and traders, I should say, really, because that's what they are. Traders sharing knowledge on the Trading Coaches Playbook. I'm pretty active and busy with what's called the E-mini Think Tank on Monday, Wednesdays, and Thursdays from 9 a.m. to 11. Actually, I'm more active after that. But during those hours, we get together on a regular basis and analyze and practice strategies in the markets. So I can show you the E-mini Think Tank actually has multiple pieces to it, if you will. We meet live for 2 hours, 3 days a week to analyze live markets and see opportunities. And I put out trading ideas every single time. They also get emailed out to you every day as well. And we track all those ideas. And you can see I can download the tracking sheet just to share with you right now. Actually, didn't need to download it. I probably have it somewhere, but let's see, where's it popping up? There it is. This was last month, winners and losers, everything there. And I think I'm not sure. I got to check to see if we closed out. Nope, there's still one pending, but I'll have to see if that finished or not. The other ones did close, so I actually need to update that. Anyway, again, we don't always have winners. We have some losers, but we learn from those losers. And as you can see, the losers are typically smaller than the winners. And that's part of trading psychology. There's multiple pieces. Um, what was it called? Behavioral finance. That's what the subject is. I couldn't remember it. I did a study and I focused on behavioral finance, which is basically the psychology of the markets and psychology of investors as part of my CMT program. Again, it's like I said, it's kind of a master's program for technicians in the markets. And again, inside of this program, there are foundational trainings that are self-paced educational pieces. You can go in and learn about a lot of different functions and strategies in the markets. There's, of course, a guide for you as well, because there's so much here. Uh, and there's documentation to back up all those lessons. So again, went low. That's weird. My voice should be okay. I don't know. Let me check my mic levels. But I think, let me see, microphone. Yeah, I don't know. Okay. Anyway, well, let's kind of jump into it. Like I said, I kind of focused quite a bit on behavioral finance and the psychology of the markets and how people are affected by what they see. And really, let me move this out of the way. Yeah, looks like I'm doing okay. My mic is up pretty well. I'm actually redlining a little bit there too. So anyway, like I said, going to the charts, and if you want to learn more, that's one of the ways you can stay in touch with me and kind of learn more about those markets is joining me in the E-mini Think Tank program. And if you're interested, just let me know, and we'll get you a link for that as well. You can also follow us, obviously, in all the social medias. I'm there too. And these are a lot of the programs that I'm in, kind of have organized. Uh, in the E-mini Think Tank, by the suggestion of the name, obviously we're focusing on E-minis or the electronically traded futures contracts. Wealth with Spreads is also a futures program where we deal with futures spreads, kind of a different way of trading the futures markets compared to what most people do is what's called directional trading. That's where you simply go out and you try to identify where the market's going to go and either buy or sell to join the overall trend. And it looks like we had some price movement today on the NASDAQ. Wow. I didn't even look at that yet. I've been busy with other programs and other things going on, but I did not see that. Was that a reaction to news? Let's see. Obviously pushing back up, but 9:30, there it is. Oh, come on. There it goes. Yeah, 9:30. We actually sold off a little after and a big drop here, 10:45. So again, I'm going to talk about the psychology of those markets, and it applies really to any time frame. It's funny when I look at these charts, a lot of people say, well, you're looking at the NASDAQ. And actually, I'm not. I am looking at the reactions of traders and investors who had opinions of that particular market. So again, I don't want to mess with this chart too much. Let me change to another chart that I don't mind messing with. And well, this one happens to be the micro M2K. That is the Russell 2000. And again, I'm on a 5-minute intraday chart. Once again, we see a big drop off around 10:50. I don't know if there was some news that came out. Whoops. But again, this is just people's reactions to stimuli. It could be news, it could be their own analysis, it could be a rumor, it could be whatever. Let me see if I do Euro, USD, Forex. Again, these are records of people's trades in a way, or their response. I'm trying to fix this. It's weird. My pop-ups, it's acting a little funky. That's okay. Just want to minimize the indicator. But again, the candles themselves are simply records of actual trades that have occurred, and it reflects the opinions of people who have been trading these markets. So really, when I'm looking at a chart, I'm not looking at the underlying security. I'm not looking here at the euro versus US dollar or Tesla. That didn't go. I am looking at people's reactions. And based on their reactions, people have history. Really, the markets themselves are driven by the pleasure and pain principle. If you're not familiar with that, if we experience something that is pleasurable to us, we typically want to re-experience that over and over and over again. If we experience something that is very painful, we would obviously like to avoid that in the future. And that's part of the reason why we have the shapes of these candles as well as support and resistance, or typically what I look at is a little bit different. I look at what's called supply and demand. And as I mentioned before, if you go into the foundational trainings here, I actually have, there it is, a video. Again, these are self-paced videos that you can watch whenever. Is it Alt Z? X? No. Thought I had the program running. Hang on. Zoom it. Control X. There we go. Now you can see things a little better. Anyway, these are self-paced trainings. And again, they're on multiple different subjects, but I do have obviously some of the basics, being able to identify trends. I also have, targeting, supply and demand targets, how to identify troubles with trends, because we need to know before they actually turn when there's a problem. So we're not caught by surprise. And again, there's documentation right here. I have leg-based zoning technique, and all of these documents were updated recently this year. So it's pretty cool. Again, you got charting techniques, trading strategies, and a bunch more, even calculators to help you with identifying proper position sizing. And pretty much everything we do, no matter what it is we are trading, is driven by our personal psychology. And you see that in the results of your trading. If you are seeing large losers and small winners, obviously that's a problem. You're doing it wrong. You're reversed compared to what you should be doing, which is getting big winners and small losers, right? Let me open up, see, where's that document? And it's because you're afraid of losing. So when you actually are faced with a loss, you typically end up letting it grow rather than facing the reality of, yes, you have a loss and you must take it. Let me see, where is this here? And again, it's the same thing with the winners. A lot of people are scared because they have a profit. They want to lock in that profit. They're afraid of losing their profit, so they cut their winners short, taking a small profit rather than taking a large profit and letting it run. Where the heck is that document? Sorry, looking for, maybe it's here. Yep, there it is. Like I said, everything I do in the E-mini think tank, basically what happens is before, or actually at the beginning of class, every single day that I have a session, we identify opportunities. As I mentioned before, see, I've got this one I can share with you. Can't give you the most recent one. That's not fair to the students. But this is also emailed out to the students as well. We take a look at, this was December 3rd, which I think was what, last Monday. Several trade ideas. Some are on 15-minute intraday intervals. Some are on 60-minute short-term swing. Not sure if I did a 4 hours on that day. And of course, we need to follow rules. And that's one of the problems. A lot of traders come to the markets and they take those big losses again because they jump in without a trading plan. One of the best ways to combat the fear that creeps in, either driving you to cut your profits short or allowing your allowing your losers to fester and grow, is you're acting on emotion, not on logic. So we need to create a trading plan that tells us exactly what we're supposed to be doing when we're faced with a certain view of the markets, whether it is some news that comes out that looks like the market's going to be bullish or something that's going to be very bearish. I wanted to check this out. I forgot to do that. I use Forex Factory as a resource for some of the data that comes out as far as news. And we see here, is it set up right? 12:13 p.m. it is. Just making sure because it looks kind of weird. I guess there's not much news this afternoon, as a matter of fact. But that's correct. Friday the 12th, 12:13 p.m. Yeah, it's set on the right time. I haven't seen anything like that in a while. Usually you'll have some afternoon news, but there happens to be nothing today. Well, it is Friday. That's probably why. And you can see that, well, there wasn't anything in particular to set off the markets to the downside. Usually when you see, again, even this is part of psychology. You've got yellow, which shows you low impact expected on the markets, orange, which is medium impact, and red, which should be high impact to the markets. Well, people pay attention to those red factories, and you can even filter for those as well. So you're just looking at the major news. And if we are only focused on the US, we could do that too. And we could look at a bigger piece of markets or time. Let me go out to next week. There we go. And these will impact people's behaviors, their views, their opinions of the markets. And again, we see that. So going back to that pain and pleasure principle, I happen to be looking at Tesla, but it could be almost any security. We see an area right here. Oops, I should have put that as a horizontal line. So let me extend that and see, going back, this is an area where anybody who bought Tesla at that price is probably regretting it, aren't they? And you can see it's happened multiple times, as a matter of fact. It wasn't just once or twice. We were in that area roughly 4 times. 1, 2, 3, 4. Let me go out to a bigger picture, see if it was there even more. Oh, yes, it was. Look at that. Going back into February of this year. Actually, I'm sorry, that's December of last year. So that is a big psychological area for the price of Tesla and for investors or traders who are looking at that security. I guess that's an all-time high, it looks like. I don't think we've been higher than that. Let's check the weekly just to make sure. Max available, whatever that may be. Yeah, this is an all-time high. I'm not surprised. So again, going back to the 1 hour and back to the time frame. Let's go back. Oh, I don't get that yet. I was trying to get all the data there. Sorry, I keep clicking through this a lot. There we are. So the first time we got to this area, let's dissect this a little bit more. You can see that prices rallied up, went a little bit sideways here, and then collapsed. This candle in particular is something that's interesting to me. And one of the things I teach in my classes is how to identify what is likely to happen next based on four key principles. Something pretty simple, to be honest with you, read pricing properly. Basically, one is color, two, shape, three, size, and four, location. Those four key principles really drive a lot of what I do. Just, I mean, it's back to the fundamentals, really, is what it comes down to. If you can understand those four things, you're going to be well ahead of most traders who are active in the markets, even professionals who are active in the markets. And oops, let me edit this. Basically, what it comes down to, if you have a dominant color, that's the trend. However, one of the signs of trend weakness is mixed colors. And we'll see that not all the time. And by the way, it's not only one of these factors, it's usually kind of a mix of all four of these factors together. So when I'm doing my analysis, I'm using all of that knowledge, putting it together to make a decision based on what I'm seeing, the evidence in the markets. Really, when you are trading, and again, it all comes down to you got to create a plan first and then have the discipline to follow that plan. That's why it's great to have a mentor or an instructor that you're working with on a regular basis to be able to follow them and make sure you're adhering to those core principles that you put into that plan. I even have sample plans that I put into the program for E-mini Think Tank to help traders start on their journey. And just because it focuses primarily on futures, as you can see, this applies across the board to any security, even crypto. You know, that especially is driven by psychology of the traders in the markets. So when you have a dominant color, again, it's not all green, but there's mostly green, we're in a bullish trend. Mostly red, you're probably in a bearish trend. And I should take a note or side out here to mention when I'm trading, I'm also looking at multiple time frames. And I actually got started using the multiple time frames from reading Dr. Alexander Elder. It's called Trading for a Living. That was the book that I read years and years and years ago. Actually, it was 1999, I think I started reading that, maybe even earlier. But he mentioned that markets are related by a factor of five. And if I'm trading on a particular time frame, that's my trading time frame, or what I refer to as my zone time frame, that's where I'm entering and exiting. So I need to make sure when I'm trading in the direction of the dominant trend because the dominant trend is going to give you bigger opportunities for profit. Trading against the trend increases your risk and reduces the amount of profit you might get per trade. It gives you more opportunities, but increases your risk. So I typically trade with the trend. So I need a trend time frame to know which direction to trade. And as I said, that trend time frame is usually that zone time frame multiplied by 5. But I sometimes fudge it a little to stick with common time frames. So I'll use maybe a 5-minute day trade and a 30-minute trend time frame. Or I could use 4 hours for some swing trades and use daily for my trend. But you don't want to skip from like a 5 or 15-minute chart all the way up to a daily chart. The problem is you're missing the trends that are affecting your particular trading time frame. Okay, you're looking at a too big of an overall trend and you're going to miss turning points. And you may be on the wrong direction because typically when you have a trend, there's two main components to that trend. You have the impulse, which is the strong dominant move in the direction of the trend, and you have corrections, which are the pullbacks that give you opportunities to join in. And of course, trends don't go on forever. They do eventually reverse and end either by going sideways or switching directions. I call that my perspective time frame. And same thing, that perspective time frame tells where trends will pause or reverse. Actually, clean this up a little bit. Whoops. And it's the same thing. You're looking at that perspective time frame is the trend time frame, again, multiplied by 4, 5, or 6, typically. And there's not one perfect combination for every single security. You got to kind of feel it out and practice. But again, it should all be in your plan. That way, you're simply following a recipe, if you will, rather than doing whatever it is off the top of your head, because that's where we start relying on emotions if we don't have something we're following. So I said I'm kind of interested in this area in this candle. Again, we had the color mostly green on the way up. Then it got mixed with some reds. I know the blue is actually part of a program that I wrote or had written actually to identify certain patterns. This candle would be red, and that one would be red as well. I'm looking at the open and closing prices up here. Oops. So you can see we went from a domination of green. Here we have 3 reds together. We didn't have reds, not even 2 together, since we started that uptrend. Now we're getting another 3 just before the big drop. So we had a warning the trend was getting weak. Shape. Basically, every candle has 4 prices being shown. You have the open, high, low, and close. The most important price is the closing price. Every candle is showing a battle between buyers and sellers. And we want to know who won, who was stronger. If we close higher, then we had the bulls winning. If we close lower, we basically had the bears winning, the sellers. So what I look for is the high to the close, because from the high, we sold off, and that is selling pressure. The sellers were very strong. The buyers were either weak or non-existent. And if they're non-existent, the sellers had to be aggressive and lower their price. You think about it, looking at that candle right there, you see a large red candle. Why? Well, either there was a huge amount of sellers that jumped into the markets, but remember, every transaction has to have both a buyer and a seller. So why was this candle so long? These are all the same time frame. It was long because there were no buyers in this area. And the only way you can attract a buyer if you're trying to sell something is to lower your price. And the sellers had to lower their price very aggressively because no one was around to buy until they got all the way down. I mean, you could break those candles up into smaller time frames, even see it, or see this on large picture as well. So any price action you have between a high and a close is showing you how much selling pressure there was during that period. That includes wicks, especially the wicks. That's a very bearish candle because the sellers couldn't couldn't sell it that high anymore. There were no buyers. They disappeared. They became very aggressive, and we eventually closed at the bottom of the body of that candle. This one was the start of our sideways move, and it shows indecision. Again, we had high to the close as selling pressure, therefore the opposite is true. Low to the close is buying pressure. And we want to see which was greater. In this case, we closed pretty close to the middle, slight advantage to the sellers, but overall sideways. And what happened? We discontinued our bullish trend, followed up with selling pressure immediately. Notice we made a lower high, didn't make a lower low yet. The next candle, it probably works better if I do this, pull it off to the side. And I've done this in my classes. We play what comes next. Well, after we had, again, lots of selling pressure, the next candle should be bearish. And initially it was. We had a lower high and we made a lower low. However, what happened here? The sellers lost their domination. We saw buyers able to push prices back up because the sellers retreated. And notice the next candle, higher low, higher high. It's very weak, buying pressure at this point, but it's buying pressure nonetheless. I say weak because of the next piece. Oops, there you go, size. If you have narrow or small ranged candles, that's weakness, either in the trend or in price movement altogether. You either had a huge amount of buying pressure matching a huge amount of selling pressure, or you had apathy. Basically, nobody wanted to trade there anymore, and you had very light volume, and prices failed to move very far. Now, that doesn't necessarily mean you're going to reverse. It could just be a pause. Okay, location, which I'll type in real quick. That's actually a whole piece on itself. That's supply and demand. So location, it's just like real estate. Everybody always says the biggest thing in real estate is location, location, location. And it's the same when it comes to trading. Location is key. If you get these narrow candles at a what we call a level of supply or demand, then you're likely to reverse. If they're not occurring at a zone, it's likely just to be a pause in price. So again, there's a lot more to this, which again is all available in the E-mini think tank, but I'm trying to give you some information about what's happening kind of behind the scenes, if you will. So once again, we saw a reversal. Remember, we had to move up, indecision, selling pressure, buying pressure, weak continued buying pressure, still buying pressure. We still made a higher low. Let me move this line out of the way. Okay, so we made a higher low still, but we failed to make a higher high. Again, it's bullish pressure, but it's very weak. And it happened after selling pressure crept in and ruined the overall uptrend. Still moving up, but once more, if we measure, we're actually seeing a close at about the halfway range of the candle. Notice these topping tails are indicating selling pressure. We seem to have trouble closing near this high, just about 485, 487, something like that. The high there, actually 484. And that's telling us something. We're trying to continue this upward trend, but we were interrupted, trend got weak, and we're seeing selling pressure creeping in. And now we gap down with a lower high, lower low. But again, buyers are still fighting. Here's why. You could see this is an area where prices went sideways and pushed higher. So people who bought in this area, remember, again, pleasure, they're willing to buy and push prices up from that area. Anybody who sold in this area also remembers the pain, and pain is not to be, I mean, it's honestly, it's a stronger motivator. They're going to remember that, and they are not going to want to sell in that area. That's why you're seeing those bottom tails, plain and simple. Notice the buying pressure was strong. We moved up, higher low, higher high, and yet we still cannot close at that 485 or 484 level. And when we try again, this one closed at 478. Once again, we made a high of 488. We probed into the unknown area, all-time highs. And the buyers were scared, booked their profits and ran. And the sellers came in and pushed prices down to close at a low of that candle or near the low of the candle. Lots of selling pressure. What do you think is coming next? We had a lot of selling pressure creep in. Even the size of these candles got smaller as we moved up. That's showing weakness. We're likely to see more selling pressure. There it is, lower high, lower low. It's not powerful yet, but this is telling us that we're not likely to maintain these highs. Traders and investors are scared up here, and there's definitely more selling pressure than there is buying. There it is coming in. Again, it's warning you. Now, remember this area. Let's see if I can draw it. There we go. This area, we couldn't get a close in that area. So this is an area where the buyers were dominating for a while. But are they going to continue? Let's see. If we get a close in or below that area, all bets are off and we're going to drop probably next to the next area of buying pressure, which is right about here. Oops, wrong one. Wanted to move that out of the way. Let's see. There we go. And look at where we went to. Should have done this. That, whoops, not too many. So we saw, obviously, that's the big selling pressure candle. We basically saw the buyers give up. This is why I don't like support and resistance, by the way, as well. Support tells you if you've got an area where prices have turned in the past, it's likely to do it again. Well, that's like saying when the waves hit the beach, it makes the beach stronger. It doesn't. When the waves hit the beach, it erodes the sand and makes the area weaker. It erodes the coastline. And that's what happened here. We battled with the bulls and bears battled, and the bulls eventually gave up. The sellers, however, they stayed strong. We couldn't get that higher close, could we? And as you see, looking back, it's obviously very easy. Looking forward and predicting, this is a little more difficult, but you know what to look for now. That change in color, the topping tails, the size of these candles are all signals of weakness. Now, location didn't help us here because this was an all-time high. But you see the change in the behavior of this particular security. And it's confirmed now. And notice, again, remember, I said this is an area of buying pressure. We saw a strong move up from here, and the buyers are still there. Will they remain? Maybe not, because we actually went a little below that area. Again, we removed the sand or the buying orders that were there. If I were to look at, let's see, this was a 1 hour time frame on December 17th. If I go to a 4 hour, because this, if I use that as my trading time frame, was that last year? There we go. This would be the trend time frame. If I was trading on a 1 hour time frame, I'd be looking at the trend, oops, sorry, on the 4 hour. And of course, my text is all over all this. That's okay. Let's move it out of the way for now. And same thing, as we were reversing up here, once again, you still see that indecisive candle. Still a lot of buying pressure, but there's a wick on the top of that candle, the size of which you haven't seen for a while. This one was actually a little smaller than this one. So that's the most amount of selling pressure you saw in this entire upward sequence or trend that we had. We still have lots of momentum, and this is the RSI. I use the RSI a lot different than most traders do. Most traders treat it as an oscillator, and an oscillator gives you signals for overbought or oversold. And traders interpret that when you're overbought, you're likely to reverse and drop. But if you're oversold, you're likely to reverse and rally. Not exactly. If you are overbought, you can become more overbought. That's called an uptrend. And you can become more oversold in a downtrend. What I'm really looking for, I treat this as a momentum indicator. I'm looking to see when momentum is failing the trend. And by the way, again, if I go back to, whoops, wrong one, that one. Going back to the E-mini think tank, if you go into, I think it's under fundamentals. Yeah, there is my RSI rules, the way I use it. And there's also a lesson on it. So again, I use it a little different. You don't understand using a 4 hour chart when there's 6.5 hours in a trading day? Yeah, it's true. In the case of stocks, I could use a daily from the hourly because that would be multiple of 6, technically 6.5. I'm used to trading a lot of futures and currencies, so I naturally have a 24-hour day. So I do use 1 hour to 4 hour, and it still works pretty well here. But yes, you could go from a 1 hour chart to a daily chart for the trend. And we can take a look at that in a moment. But again, notice indecision, weakness in the bullish trend, failing to make a new high. And when we tried to, we saw the selling pressure again. The selling pressure takes over, and we're starting to move down. Again, if I go to the daily chart there, same area, oops, because this is an equity, this is a stock. So basically our higher time frame from 1 hour would be daily. It looks a little different because we still had bullish pressure and made a new high, but then we obviously completely reversed, making that new low and lots of selling pressure. Notice on this trend, we might have to go back a little further, 2 years so we can see it. And let's try to make it easier to zoom in here. There we are. So how do you see the trend change here? Again, moving up. Still bullish pressure, right? Because we've closed away from the low. And now the selling pressure is taking over. This doesn't necessarily mean the trend is reversing. We're just losing some momentum and we see lots of selling pressure. And notice the size of that candle. Let me remove this too. There we go. The size of that red candle is very large. It looks like it's the largest candle on the screen, which if you have a large candle, I didn't start talking about that yet, but a large candle indicates a lot of momentum in a particular direction. And you can see now we have 4 red candles. Do you think really we're still in a bullish trend? Of course not. Again, mixed colors. We may be starting a bearish trend. Let's see if the red continues. No. So interruption in the trend. This would be a red candle. So we're alternating red and green right now. We have a very weak trend. We are moving sideways. We can even see we have a lot less bullish momentum than we had previously. Red, red, lower highs, lower lows. Even the trend as a whole, oops, sorry, didn't mean to do that. The definition of a downtrend is lower high followed by lower low. All we need to do is break that low and we're in a bearish trend on the daily. Now we're in a bearish trend. No, it's a red candle. I know I have an indicator on it. I should take it off. Let's see. His studies. Now you can see it. So again, lower high. Now we actually made a lower low in price, I believe. We're in a bearish trend. So we should be focusing on the shorts. And look at that. We started making new lows. Once again, colors changing. Bearish trend is ending. And we're moving sideways. So it tells you, again, price tries to tell you what it's likely to do. You just have to know how to read it. And go back to the beginning here. There it is. Did I pass it? Oh, what happened on my text? There it is. I was going to say it had to be here somewhere. All right. So we got the color, shape, and size to help us out. And on the size, the next piece I wanted to show you was large, or what I call expanded range candle. And that shows strong pressure, whether it be bullish or bearish. However, actually, let me put this on the next line. Location is key. Okay. And the reason why is if you get this candle, oh, I spelled it wrong. Sorry. Thank you. That happens. I'm typing too quickly. I'm thinking about what I'm going to say. I'm like 3 steps ahead sometimes. Anyway, so the location of the large candle is key because if you see a large candle that is in the trend direction, that is the novices chasing. Again, it's psychology. The novices are afraid they're going to miss out on opportunities, so they jump in after prices have already moved. When are you supposed to buy things? When they're cheap, when they're already moving down or at a lower price. Now, don't get me wrong, you can buy high if prices are going to go higher, but it's much better to buy low. We typically, I mean, it's a season right now. Everybody's looking for sales. We're going Christmas shopping, right? Or Hanukkah shopping, whatever it may be. So if you go out and you try to buy a brand new TV after the prices have gone up, because it's really popular and everybody wants it, that's kind of silly. It's much better to buy that when the prices were low and you can get a good price on it. Again, it's on sale. We want to buy low, sell high, exactly. But of course, buying high, selling higher also works. Selling low and buying back lower also works, but it's got to be the right time. So typically, the large candle is novices chasing. There's a few other key things. As a matter of fact, there's a strategy I built around that. Which is it? I think it's in the breakout trades, I believe. And under my documents, let's see, is it under strategies? Yeah, breakout trades. There's a whole strategy I built around seeing where the novices are. And this, by the way, this goes back to some of my personal experience. I used to be a trader for a brokerage where I would see institutional trading and the orders coming through from them versus retail traders. And you could literally see the novices jumping in with all their orders after prices moved. If you get the large candle starting a new direction, oops, those are the pros. And again, you'll see this on so many different time frames, so many different securities. It just happens a lot, obviously. Move that around a little so we can see it better. There we go. So just even looking at our screen here, move the RSI out of the way, take more price range. This was a large candle, but we were already moving down, weren't we? Uh-oh. This might be the novices giving up after we already started turning down. Remember, I showed you some of the warning signs before that happened. There may be some professionals who were selling off as well before it got too low, but notice what happened. Get rid of that for now. And right here, you see we broke the prior lows. Change this and move it out of the way for now. Those are the novices chasing. What usually happens after the novices jump in, the pros will pull prices back to shake them out or make them regret their actions. Think about this. If you sold here your long position and you see prices coming back, especially as it gets back right to the area where you sold, psychology again. A lot of people are thinking, oh man, why did I sell here? It's right back and it's probably going to go up to the new highs again, or at least back to the old highs. So many of the novices, again, psychology, they'll buy in this area. Well, if the pros were selling here, or if they were buying from those novices at the low prices, they're going to sell to those novices who are getting back in. And prices drop again. Oops. Notice this is actually a novice candle as well. We were already moving down. Novices jump in late, right near the origin of buying pressure. As a matter of fact, it's not a huge candle, but this one, oops, that candle is a larger candle than the other ones around it. Let's see that one. Novices jumping out late, pros buying in early. They are buying relatively low. There wasn't really anyone to sell to them, so they had to gap the price up a little bit. There are the novices getting back in after a move up, and the pros who bought here are more than happy to sell to them. Prices stalled out. They come back to the pros right there. Once again, who do you think's bailing out at this point and selling? Those novices who bought too high. They're buying right where the pros, I'm sorry, they're selling right where the pros were buying before, and prices move sideways. They can't break down yet. Eventually they did. I actually looked at a really good example in the class this week on nat gas. Let me see. Actually, I know I have a picture of it that I took, so let me see it. E-mini think tank. Where did I put it? Bull spread. No, I'll find it. Don't worry. Got one or two places it's likely to be. Yeah, where is it? Hold on. Now, of course, I can't find it. Why not? I did a screenshot of it just the other day in class. Let me see. Bear with me. Oh, there it is. So I just want to make sure I got the dates right on this. It would have been Thursday on a 15-minute chart. So let's go to the right time frame. First of all, 15. And I think this is it, isn't it? Yeah. Here we have a lot of examples. The trade obviously didn't work out yet. I was waiting for a pullback to shake out the novices again. But like I said, this happens on multiple time frames, multiple securities. I showed you on Tesla as well. But you can see where pros versus novices are chasing price or causing new moves. So take a look, focus on the larger candles that you see. You see a few of them popping out here, definitely right here. And ask yourself, are they occurring after a move in that same direction, or is it possibly a new direction? And it gets a little subjective here, obviously, but I would say we were moving sideways and started with the new direction down and even continued for a while. Here, we did not have as much of a sideways move. I would say we were already moving down. And because we were already moving down, change the view a little bit. There we go. Because we were already moving down, those are the novices jumping in. The difference is here, there's only one sideways candle. There, we were going sideways for a while. So I would say that at that point, the trend was sideways. The professionals kicked us off, and we did not try to retrace. Okay, this was an area where there were not a lot of buyers, so sellers had to be aggressive. That tells me if prices return to this area, those pros who couldn't get all their orders filled might be there to sell again. And we'll see that. We'll come back to that in a moment. This one, however, as I said, one candle, that's not a trend. That's not sideways. We were moving down. These novices are likely to get shaken out because they are scared that they're missing out and they're either selling their longs before it gets worse or they're entering a short position to profit on the downward move. The pros recognize this and look at what they did. They were nice enough to buy from those sellers. And once all the selling pressure disappeared, prices rose. And basically, if they sold, they're going to have stops to buy to cover. Well, they're realizing, hey, my profits are gone. I'm back at break even. I better get out before I go negative. And they close out their short. Meanwhile, the professionals who are buying here are gladly selling to them. And prices again move down without the novices. Notice once again, a large range candle there. That's after move down in price. And let me just edit. There we go. So we can see the colors. Notice that's after move in price. Those are the novices jumping in yet again. And just like they did before, we're likely to see prices pull back to shake them out. Let's see. Didn't quite make it all the way back before it started pushing down again. This area, it's kind of subjective. I would say we're moving slightly sideways, even up, but it wasn't a very long basing. But I wouldn't expect that to be the novices. That means that that area, just like this one up here, let me change the color. That might be the professionals selling. And often when they sell, they're selling large quantities. They cannot sell everything they have all at once. So what happens, I had to do this as a hedge fund trader as well. You do what is called working the order. you take a large order and break it into smaller pieces, you get as much executed as you can at your price range. If prices leave the range, you simply wait for it to return and then execute the rest when it can or when you can. That's actually what causes supply and demand zones. I'm trying to trade with those professionals. Let's see if it ever comes back. I don't know if it does. Let's speed it up a little bit. Nope, it did not. However, you see again a large candle right there. We're already moving down. Novices couldn't quite retrace all of it, but it did come back quite a bit. This one, that's a larger candle, but is coming after a sideways move in price. There's your pros again. So, should we return to this area, we are likely to see the rest of their sellers push prices down. And again, there was a gap here because there was a large move. The buyers disappeared, right? I mean, they tried pushing prices higher. Once again, color, shape, size. Notice the topping tail. That's selling pressure. We closed away from the high before we reversed. So if there's a gap where there's not a lot of buyers there, anybody who did buy there is definitely regretting it. As a matter of fact, anybody who did buy in this area is hoping we get back there so they might be able to sell to close out their loser. That's adding to selling pressure in that area. We come back up. As we come back up, who are we greeted with? Once again, a large candle, same direction we're already moving. Novices again, they're going to get shaken out. We do go a little higher, even with the color and shape size. Mixed colors, green dominated at first, but is giving up that upward move. Indecision, selling pressure now at the area that the pros were selling, and we go down. Like I said, you can do this on pretty much any security, any time frame, and it works the same. Even the indexes. If I go QQQ, and let's go bigger picture, say weekly. Clear drawings. There we go. Remember what I was working on there? But it's the same principle: color, shape, size, and location. Oh, thank you, Ed. Oh, the SPX? I'm not sure when I'm doing another workshop on that. I'll have to take a look. He's asking about a workshop that I do for the SPX strategy that I trade. The course is called SPX Cash Flow Secrets. There's actually a 2-week free trial if you want to check it out. But if I go back to the dashboard, you can go to my website. It's brandonwendell.com that has all my classes if you're interested. That's another way of finding the links. Let's see. I'll put it right here. But yeah, there's educational videos on that and documentation with it as well. Like I said, I'm updating all the education. So where was I here? With the move to the upside, this is on the NASDAQ. We should probably go a little closer to today, 2024. This is the beginning of 25. And you can see before we started turning down in February of 25, there was not really a huge amount of warnings, a little bit of topping tails there, but not a whole lot yet. We still had our domination of green until the third candle, even the second candle, to be honest with you. There you had four red interrupted our upward move, but then we came back to domination of green, but not nowhere in that upward sequence do you see more than one red candle next to each other. You don't see two anywhere. Now we got three. That means this upward trend is obviously over. We had the mixed colors and we're starting a domination of red. Notice again, as we're moving down, what are you seeing on the bottom of those the candles? Buying pressure. And this one, it's growing. We're closing away from the low, further away from the low, and we're down to an area where prices actually rallied before. Indecision. small range candle at an area location where prices had rallied previously, combined with that buying pressure, that is telling me we are likely to see either a sideways move or even a rally in price coming. Not so much yet. We made a lower low, kind of gave up all the buying pressure, but still made a higher high. And no domination. Obviously, the selling pressure continued, seeking out more buyers. However, large candle in a downward move, novices are in. It may be the end of the move. It's also origin of a couple rallies as well. We'll see if this holds. There it is. It made the lower low, but now we have all the buying pressure coming back in. Just one candle doesn't change it though. However, that is a large candle in the opposite direction. We have pros buying again. A little bit of profit taking, but look at the trend shift. There it is. Coming up towards prior highs. Got a little bit of selling pressure showing us some weakness again, don't we? Even though we made a higher low, higher high in candles, this is the origin of selling pressure. And we may be pausing or even reversing. We just have to wait and see what the market tells us. Again, topping tail, selling pressure. But there the buyers came back, and we're probably going to go higher. Oh, selling pressure again. Now, this is weekly, so this is giving you an idea of what to expect for the next week. I would expect selling pressure coming in, and especially if we make a fresh low. However, if we can go above the highs, we may actually be able to break above and make a new high. More selling pressure. There it is. Close higher. We're taking off to the upside until we see mixed colors again or selling pressure. Not yet. Now, nope, not yet. Two reds. First time since back here where we paused before the breakout. Three. That's a definite warning sign, isn't it? Didn't give us a whole lot of warning beforehand. Very little bit of selling pressure there compared to everything else, but not really a big alarm going off, if you will. Green came back in. We're not dropping. We're likely to move a bit sideways. Let's see if we can continue. Again, we couldn't close in this area. If we can close in this area above that space, you see we just touched it again, but we can't seem to close up there. This is a red candle. We closed way down here. So that's a vacuum where the buyers are missing. If we can fill that vacuum, prices have a chance of going to new highs. Oops, hang on, I don't want to do. Move that down a little. Still can't do it. If we make that right now high, possible lower high, lower low would be a downtrend. And that's where we are right now. So again, looking at this, we have ended this uptrend because we got a domination of red again, a little bit of green to hold us up, but we have a vacuum where we're having trouble closing above that 630 area. We haven't made a lower high yet, technically, because this is, let's see, the high here, 628.92. That is a higher high. So to show or demonstrate a lower high, remember, in order to get a downtrend, we need a lower high and lower low. But the first part's the lower high to give you that warning. In order to actually get a lower high, you need to have a high in price on a candle with a lower high and lower low on either side. So we would need to see red or green candle, doesn't matter, but basically lower high and a lower low compared to that candle. Then you can officially say you've made a lower high and are maybe changing trend. If that doesn't happen, we could keep going higher. But we're at a crossroads right now where we're having trouble closing above that 630 on the Qs and are seeing weakness. So that's all I've got for today. Unfortunately, I got to go, but hopefully I gave you some insight. Yeah, SPYs are probably pretty much the same, I'm sure. Again, I'm on the weekly time frame and slightly lower high, but it's not official yet because we haven't made a lower high and lower low after a peak in price. We are seeing weakness in momentum, but I'm not getting a warning sign of trend reversal. And daily might be a different picture, sure. Yes, that has put the peak in. You're right. There's the first peak here. Like I was saying, you've got a high in price with lower highs and lower lows. There's your high in price, lower high, lower low. So that has officially put in a lower high, but there's this one in between. Can't ignore that. So technically, this is not going into a downtrend on the daily chart. Weekly might be another story, and obviously that will influence the dailies. But anyway, like I said, I've got to run. Hopefully, you guys got some good insight. I would love to have you join me if you're interested in some of those programs. You can keep an eye out on the calendar for Wealth Builders HQ, and you'll see a lot more free workshops and things coming up to give you some more insight of what we do. Thanks again for being here. Appreciate your time. So trade safe, trade well. Take care, everyone.